Welcome. In this video, will ZBCN coin make new high? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. Another notable and quite promising structure on the chart is the clearly defined upward curving arc that the price is following. These types of rising curves are among the most powerful technical formations, indicating that market dynamics are becoming increasingly positive and that the price is gaining upward momentum. These parabolic or arc-like structures, frequently utilized by investors, suggest that the price is not just experiencing a linear rise, but is instead accelerating over time into a stronger trend. Looking at the current price movements, we observe that this curve is actively in play, with the price progressing upward in a balanced manner without falling below it. Such curved structures typically indicate that the internal dynamics of the market are improving. Especially with the upward disruption of the supply-demand balance, it becomes evident that buyers are becoming more dominant and selling pressure is decreasing. As long as the price stays above this curve, investor confidence increases and the upward movement gains momentum. This structure acts as a kind of dynamic support, and each time the price approaches the curve, it tends to bounce back upward. A similar scenario is currently unfolding, which is quite encouraging. Seeing the price move in alignment with this rising curve reinforces the market's confidence in itself. Because prices rarely move randomly, there is always underlying psychology and investor behavior. The continuous upward bend of the curve shows that the market is facing increasing buying pressure, which is being reflected in the price. A price action that does not fall below the curve also suggests that buyers are maintaining control and that the upward trend may accelerate. The fact that the curve continues to move along with the price could also be a sign of a potential parabolic rally. Parabolic moves usually start slowly and then accelerate over time, becoming steeper. In the current price structure, the signs of this potential are clearly visible. In such movements, each moment that the price stays above the curve creates a new wave of confidence in the market and encourages more buying activity. Prices that fall below the curve are generally seen as weak, while prices that remain above confirm the strength of the uptrend. Another key characteristic of these types of rising curves in technical analysis is that they often act as psychological support levels. This structure is frequently seen by investors as a hidden trend line, and each approach to the curve is viewed as a buying opportunity. In the current situation, the price is moving in harmony with this structure, and each time it approaches the curve, buyers step in to push the price back up. This indicates a technically healthy and strong uptrend. Furthermore, this curved structure is not only technically significant, but also serves as a visual guide for market momentum. Rising curves indicate that the price is gaining upward momentum, and that as long as this momentum continues, the trend will likely persist. If the price does not dip below this curve, it suggests that the trend is progressing in a healthy manner and that reaching higher price levels is possible. Staying above the curve also implies that investors still have a strong appetite for buying and that profit-taking has been relatively limited. From a graphical perspective, the price shows a very high correlation with the curve. This reinforces the validity of technical analysis. The continuous upward bend of the curve also suggests a post-accumulation distribution pattern in technical terms. This implies that after a previous sideways movement, the price is preparing for a strong breakout, and the curve is laying the groundwork for that move. As long as the price stays above the curve, the likelihood of it climbing even higher increases, supporting the continuation of the trend. But we can't make decisions based solely on the curve, so let's now look at other metrics as well. Stay tuned. Among the notable structures on the chart, one particularly stands out as it creates highly positive expectations and is seen as a confidence signal among investors: the inverse head and shoulders, IH and S formation. This pattern typically forms near the end of downtrends and is considered a trend reversal signal. The current price action indicates that this strong formation is gradually nearing completion. Especially when analyzing the most recent candlesticks, it's clear that price movements are concentrated around the levels that correspond to the head area, indicating that this portion is in the process of forming. This could signal a possible reversal move and the start of a new uptrend in the near future. The inverse head and shoulders formation consists of three main components: the left shoulder formed by the first decline, followed by a larger dip forming the head, and finally, the right shoulder created by a smaller pullback. This structure is considered a highly reliable trend reversal signal in technical analysis. Currently, the price is trading around the area corresponding to the head, which indicates that the downward momentum is weakening. Buyers are beginning to step in, and a solid foundation for a potential reversal is being laid. The clear and well-defined formation of the head indicates that the pattern is developing in a healthy manner, and that investor psychology is aligning with this structure. Typically, the head is where selling pressure peaks, but also where buyers begin to become more active. Once the price forms a bottom at this point and starts to recover, investor confidence increases. This then allows the right shoulder to form and the pattern to complete. At this stage, one of the most important details is the neckline of the IH and S formation. Since this line has not yet been tested, the price remaining in the head area is considered a positive development. This process allows for the necessary consolidation to build the right shoulder. The more balanced and defined the right shoulder is, the stronger the pattern becomes, and the more intense the potential breakout may be. A sideways movement or slight upward swings in the price at this point are very positive for the healthy development of the formation. The fact that the price is currently in the head area signals that the downtrend is losing strength and that a shift in market direction is starting to be discussed. Especially the small upward reactions from this area show that buyers are re-entering the market and are beginning to resist further declines. This creates the buying pressure needed for the right shoulder to form. Looking at the overall market sentiment, the price behavior at this stage reinforces investors' belief in the pattern and strengthens expectations of an upward breakout. Once the IH and S formation is completed and the price breaks above the neckline, the standard target calculation method used in technical analysis comes into play. According to this method, the distance between the bottom of the head and the neckline is measured and projected upward from the breakout point to estimate the potential price target. In the current case, a similar calculation reveals a quite satisfying upside target. This shapes medium and long-term investor expectations in a positive direction. Moreover, the effectiveness of this formation is not limited to price structure alone. When supported by other technical indicators such as volume, much stronger signals can emerge. For instance, a slight increase in volume following the formation of the head confirms buyer interest. A renewed rise in volume during the formation of the right shoulder indicates an impending breakout. Considering all these technical elements together, it is reasonable to conclude that the price is preparing for a new uptrend through this IH and S formation. The MACD indicator, one of the most widely used indicators in technical analysis and effective in determining market direction, is set to play a critical role in the current charts. The movement of the MACD line above the zero level is considered a very strong signal for investors, especially when the short and long-term moving averages converge and eventually cross upwards. Such movements reflect the potential for the price to gain momentum and are also known to signal the beginning of uptrends. The technical significance of these developments observed in the MACD indicator is quite significant, because the zero level represents the middle of the balance between buyers and sellers. If the MACD lines are moving below this level, it can be interpreted that the market is still somewhat weak or indecisive. However, when the lines break above this level to the upside, it indicates that the buyers are now in control, prices are gaining upward momentum, and positive expectations in the market are starting to grow. Therefore, the behavior of the MACD around the zero line provides valuable information about the strength and direction of the trend. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.